Talk about China and so much more. Longview Global Managing Director and CNBC contributor Dewardric McNeal. Good morning to you. Let's talk about
Andrew.
both the downgrade, what that means in terms of the slower growth in that country, but how you think it overall, therefore, affects the relationship that China has with the U.S. and how aggressive China may or may not be when it comes to some of the political issues we've been dealing with.
Thanks for having me, Andrew. Listen, I think let's deal with China's domestic economy first here. Look, I think the story here, Andrew, is that the data continues to trend in the wrong direction. We've seen a lot of policy support, the rate cut overnight. We had a 24-point plan over the weekend to support the private sector. But none of these measures seem to be working to really boost confidence in this economy. Both consumers and businesses just are not confident. And I suspect, Andrew, a lot of this is starting to be confidence in their leadership's ability to manage an economy through a crisis. And we don't talk about that as much. But, you know, there's some real concern about whether or not this group of guys, and they're largely guys, are prepared to do what it takes or knows what it takes to really get this economy up and running again. And on the U.S. side, look, I think this is not going to change U.S.'s goals in terms of long-term strategic competition with China. And I don't believe it's going to necessarily make China more aggressive. There's major problems at home, and I think that's where they're going to have to focus.
Well, that's the question. Does it give the United States any more leeway for the U.S. to be more aggressive, maybe, perhaps?
There are a lot of people who believe, Andrew, that when your competition or opponent is down, that's when you press advantage. But that's just not what the Biden administration's goals are. And, you know, they've stated clearly it's not to try and tank China's economy, or they really are focused on national security. And so, you know, there are many people who believe you should press your advantage. But we've not seen that playbook from the Biden administration. It's really about protecting U.S. national security. And to the degree that this helps to do that, fine. But I don't think you'll see them press the gas on anything to try and tank China's economy. That hurts us all.
You said that you thought that China, or at least the gentlemen that are running China, don't know what to do. Is there something that you would do?
Look, I think at the end of the day, Andrew, you have a situation where perhaps Xi Jinping, let's be clear here, may have overestimated the resiliency of the Chinese economy. I think he may have underestimated the value of the private sector to this economy. And so you're starting to see some slow unwinding of some of these early aggressive policy moves against the private sector. But look, I think we need to step back and allow for those individuals who understand what the private sector can do to help this economy really do it. And I'm not sure yet that Xi Jinping is prepared to take his hands off the wheel. That's one of the major problems in my view.
When you think about the multinationals, the Nikes, the Apples, the Starbuckses, in terms of the slowdown in China, how big an impact do you think we're going to see that when it comes to earnings?
Well, look, if you look at some of the latest information about Starbucks and Apple, for example, you know, that's one place where we've seen things do fairly well, as you're still getting some people out buying coffees and buying iPhones. So it depends on the sector that you're in. But I think, you know, with an economy this bad, we're going to see some impact on earnings, but it's going to have to be a real look at which sector you're in. Automobiles, Tesla, for example, you're going to see an impact there on the bottom line. That's a saturated market, and Chinese companies like BYD are, quite frankly, eating Tesla's lunch. So it all depends on what sector you're in, Andrew.